Hey everybody, and welcome back to another video. This is How to Invest. Spencer here, and this one will be on Lucid Group. They are currently making the next generation of EV and luxury brand automaker, and the stock was up over 5% today. Along with the indices, they were all green today. The Russell 2000 being the biggest gainer, closely followed by the Nasdaq, and good gains in the S&P and Dow too, all above 0.5% after, I believe it was 5 or 6 days of red consistently. We didn't really have too much red due to the consistency. They were just very small or fractional moves downwards, but it was still good to see some downward momentum or selling pressure to get some good buying opportunities, including this stock. The market capitalization is currently $32 billion. Which I must say is very rich for a company that is, I would consider them pre-revenue. If we look at their balance sheet in just a second, they do have some revenue, but that was just from reservations for their cars. And they did have quite the demand for reservations. They were able to obtain some revenue, but very, very small. Their stock price is currently it was $19.91, but after hours it is $20.09, which is a great move upwards from just the lows about 2 weeks ago. On the first of the month, it fell. If the intraday was under 17, it hit 16 something due to insider selling, some lockup expirations or of some sorts. I believe there was just a considerable amount of insider selling that they were finally able to take advantage of, and they did, and they sold a good amount of shares to raise capital and whatever they needed it for. And whenever this happens, a lot of people take this as bearish news and find this is a reason to sell the stock themselves, which is obviously not always, but in most cases a mistake, especially with an early stage growth company such as this one. But here, looking at their latest quarterly results, we can see that they are burning a good amount of money. If we look at their operating margin, they're negative 20,000, which makes sense considering that they don't have any cars on the road today, and they won't for probably until 2022 due to the great chip shortage, as they'll call it, considering no automaker or really anyone who needs chips can't really get the amount that they need currently due to high demand and lack of supply. But we can see here that they have 4.5 million of revenue, which I said came earlier from their pre-orders on their cars or reservations. And then we can see that their EBITDA is negative almost $1 billion, which is quite a lot. But the reason that I am comfortable in starting to research the stock more and get more and more bullish on it is because it does have a strong balance sheet, even though they are burning through substantial amounts of money. And this is due to a really high demand for the stock in general. It's been really one of the hotter stocks in the stock market. I think back in maybe February, it went up to $60, up from 10 the de-SPACing. But their balance sheet's phenomenal, and I think no matter what, they will have the opportunity to have a phenomenal balance sheet because there's such a demand for their stock that if they issue out more stock or debt, the shareholders will buy it right back up very, very quickly. We can see that they will easily be able to pay down all of their debt currently and still have a great deal of cash on the balance sheet. Now, this isn't a huge amount of cash compared to their market capitalization, but their market capitalization is obviously inflated due to the amount of growth that is expected for this company over the next 5 to 10 years. So if you compare that towards even a more modest market capitalization, the cash balances look much more attractive for a company that's set to grow as much as they are. And then the last thing that I always like to look at is that the percent held by institutions is very high for this one, at almost 64%, which just means that it's held by a lot of big money and big money hedge funds, which at the end of the day really is what moves stocks, is big money buying in and the hundreds of millions or even the billions, which really changes the market capitalization here. If we look at some of the news articles that were coming out today and really why the stock has been moving a lot, other than that big insider selling that they had, I switched over here to Webull. As I said before, they always have better articles and more available for individual stocks that I've noticed than Yahoo, and it's just easier to go there than going to Yahoo or Google and Googling articles on the stock. I find looking at Webull and then tracking the chart and then looking at other numbers on Webull is it has its advantages, in my opinion. But the reason that it was up over 5% today is because if we look here, it says Bazinga, why shares are trading higher today. This is from BNA, which is, if you don't know, Bank of America Securities, initiated coverage on the stock of a $30 price target as a buy, which is over 50% from today, even after the move. So a huge call on the stock, which is very, very bullish. But we will get into later how $30 may be good in the short term, and it may be a better trading opportunity than a good price target for the long term. But also, it was moving down in the short term because just yesterday, Morgan Stanley, who I would consider a more highly regarded financial advisor, because that's most of where the revenue comes from, is financial advisory and them investing themselves, set a price target of $12. And I would personally believe this company to be closer valued to $12, but obviously, like I said earlier, this company isn't really being valued on a lot of the fundamentals of the company, and a lot of people see this as the next Tesla, or didn't get into Tesla and don't want to miss out on a stock that has the potential to 10x if you look at the current market capitalization. Comparatively to other automakers, this is very high. We did a video on Ford and GM, and Ford's market capitalization is around $50 billion. And considering that they don't have any cars on the road, this can be quite rich. But like I said earlier, it is taking into account much of the future growth and growth percentages that this company will take on, being that it's a strictly EV player and that these EVs will be the cars of the future. But it was just kind of interesting to see the two price targets set by pretty highly regarded banks kind of fighting it out on the stock market and where the price of the stock will really go in the short term. But if we look at the technical analysis of the stock, we go over, let's try that again. We'll go refresh it. We'll go to the summary. And I just wanted to do a quick technical analysis to show you why $30 may not be such a bold claim or the best of targets. So this is Lucid stock chart. This doesn't, I'm pretty sure this doesn't include pre-SPAC. So when it was under, I'm not even sure the ticker symbol it was before Lucid. If you guys know, drop it down in the comments section. But I have drawn this channel just to kind of show that this stock has been range bound just about ever since they changed their ticker symbol and officially de-SPACed. So they de-SPACed right about the beginning of the year on January 11th, and then less than a week they were almost up 20% very, very quickly, and then they quickly tried to consolidate sideways. Like, whoa, that was a very quick move upwards. Let's take a little bit of a breather. And then from there was just immense buying pressure in the stock. You can see here that they were breaking through their 5-day moving average, and then just kept on a tear. Didn't break through their 10-day moving average until a month and a half later, after it already hit $60. It broke through this box, and we saw it try to consolidate back into the box, saying, whoa, that's a really high move upwards in a short period of time. We might be getting a little overvalued. So people are trying to take their profits, and It ran into the 10-day moving average and bounced right off of it. And this was when a lot of retail investors and the hype around the stock became the highest. It would be covered on CNBC, Fox News, like 3 times a day. There would be videos on the new car. The CEO would have talks, and even a lot of people who in my life typically don't like to talk about stocks would be talking about it, saying, "Oh my God, this is going to be the next Tesla." And there was just a lot of hype and euphoria around the stock that was just very unsustainable, because there's always going to be the next best thing or the hot new toy on the market. So it was just evident that this would sell off eventually, and it did quite dramatically. So from a high of 63, it fell down all the way to 2040 within a month, within almost a week and a half, 2 weeks. And then since then has been in this range-bound channel like it was earlier, right as it de-SPAC'd. So we had a slight uptrend, broke 30 slightly, and then fell all the way back down. We're like, whoa, 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 we don't want to go above 30 yet. We're still a very early company. We don't have any cars on the road. That's getting a little too overvalued for this company. And then it would break down, and then tried to have a breakout again, bounced off of the 25-day moving average, bounced down, hit our support here, right at 20, or this is, it looks like 1725, hit the support, bounced right off of it, tried to have a breakout, couldn't break through the 5-day or the 50-day moving average, and fell back down, hit the support. And then we had a really nice move from May. We had a lot of just kind of uncertainty in the market and a lot of fear around inflation. So a lot of stocks were just sold off, unrightfully so. And then we had a really nice rally from May up until June. We went from 1725 to 26. That's a very, very nice move upwards. For a trading perspective, fell back down to around 22, tried to break out again, and then we hit our resistance up here at right around 30, and then ever since then, it looks like we've been in a downtrend. We had don't want to edit that, sorry. We had a slight breakout again here at the end of July, and then ever since then, you can see we're in a very small, consistent downtrend. Here is where we had the insider selling, and the stock did break 16. It almost hit 15 at a low of 1612. But then ever since then, we have been in a very slight uptrend. If we look here on, this was September 8th, we had a low of 1870. And again, yesterday, we hit this low again. So this is actually a very clean double bottom, in my opinion. And we had a very clean break from it today off of those buy orders from Bank of America. But my plan to initiate this stock and trying to start a position, I've been following this stock for a while and didn't have a position up until within this past month. I didn't have a position until even the first of the month. I had been tracking this stock for a while and just had considered it to be fairly overvalued, in my opinion, for the stage at what they're at currently. And when I saw that I think they were down over 15% at their highs at that day, I pulled the trigger and have been holding my hand since then. I'm kind of waiting to see if we retest the lows down here. If we start to see some consolidation around this price, I might be tempted to buy in more. But I'm currently pretty happy with my position here, considering that this is on the more speculative side of a stock. But if we do start to see a breakout, I will not be planning to sell these stocks anytime soon. I will be a long-term holder, or hodler, if you like to say. And I'm planning on hopefully over 2xing, 3xing, and maybe even more if this company really provides what they're claiming to have as a technology. So that is my game plan on this stock. Thank you very much if you made it this far, and have a great